Welcome to another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. On location, the Nebraska Farmers Union annual meeting is underway in Columbus through Saturday. Well, we're going to talk a little bit about what's going on, not only with the economy in China, but where are we at when it comes to buying U.S. beans? We know we've seen a recent pickup, especially when we look into the months of February and March. Also talk about the really what's going on with Russian wheat. We know that there's been a lot of concerns right now with that crop. And is this a good time to be trading? We'll look at what's happening cash wise, not only from a livestock perspective, but what type of marketing plans do you have in place? Because before we know it, the end of the year will soon be here. Stick around, a lot to break down in this week's episode coming up right after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. As you can see, joining us, Sue Martin with Ag and Investment and Jeff Peterson with Heartland Farm Partners. And I made a comment in the opening that, we're almost to the end of 2024, which seems so hard to believe. And I think that's where I want to start, because we are starting to get those last minute marketing plans in place, or should be. So real quick, before we dive into what's happened this week in the markets, I wanted to start out with you guys to get your thoughts on where we should be at this point in our marketing plan as we focus on 2025. So Jeff, I'll start with you. Is there something we should be doing right now in the last couple weeks?
Well, I think this is always an opportunity, bring out that marketing plan, go in there, update your expenses so you know what your costs of productions are, right now as you're getting towards the end of the year. But then also think about, do you have some bins you need to core? This is a good time to work on getting some of those bushels moved. And then also think about your cash flow needs and how you're going to generate the cash that you've got. Whether you've got bushels in town, maybe they're on storage and you could look to move those over to a basis contract and take an advance. Maybe there's bushels that's in the bin and you really don't want to physically make that sale. Don't forget about those FSA loans where you can either take that income or as a loan, those against those bushels that you have in the bin, but then really give some hard thoughts to when do you need to move these bushels? Do you need to move logistically a certain amount in December, January, February, March? Because I think there are some basis opportunities right now. If you've got bushels that need to move in December, I think some of the basis levels that we're seeing here are good to go ahead and get locked in. And if you're also looking out there to January, first part of January, I think there's some opportunities on the basis there also to work on getting locked in. I wouldn't look too much further than that at this time. Definitely don't look at anything out in April and May. There'll be some better numbers. But that's a few things that I'm looking at right now, Susan.
What about for you, Sue? What are some things that you're having conversations with your customers about what they should be doing going into the end of this year into 2025?
Well, first off, I really agree with Jeff and many of the things he said. I will say I do think that the month of January is going to mark a high for us. I at least think we're going to rally into mid-January, which is also coincidentally right near the inauguration of President Trump. And but then I also think that I'm hearing a very good yield, cash bids out here, and it's because farmers aren't moving grain. Once it enters into their bins, they're not going to open those bins very easily. So I would say if you need to make some sales before the end of the year, look at these cash bids and go ahead and do so. Weather's pretty decent to be able to move grain, at least in Iowa it is, and I suspect in Nebraska as well. So I would be doing that. But I also think as we get more in towards the middle of January, and we don't have our cycle windows figured up for that month yet, but as we get closer, I would be looking at marketing some grain there as well. Just keep one thing in mind. The lead for corn, for example, the lead contract, right now, DEES's lead contract, and when it goes off, it'll be March. But between now and the end of the month of December, a high for a lead contract this year has been 476 and a quarter. And so I doubt that we take that out between now and the end of the year. So that puts onus on the March contract as we turn the year over. If you can take that out, which I'm not holding my breath, but if you can take that out, that would then set a whole new ballgame for next year. But years of a five tend not to be real special years more times than not.
All right. What about strength in the corn, Jeff? What are you seeing? I mean, it had a decent week this week. Is that momentum going to continue for them?
Well, that's a great question, Susan, one we're getting asked a lot. So if we kind of dig into it and look at it, let's touch on kind of what's going on right now. We've had some headlines come in from some concern on the Russian wheat, and anytime we can get some support from the wheat market, that helps a little bit. We're also finding it seems like maybe some bottoming action on the charts on the wheat side. The other thing is we move around the corn side. We know that the funds are long on the corn. And as a result of that, what that's doing is that's helping us give us some support in the market. And we really did see some of that support this back Thursday. We had a key reversal higher. The market traded down, found some support, traded up higher, was able to break a downtrending resistance line there, and actually had a really good close here today on Friday at 440. And that opens up where we've got some resistance up above us, 442 and a quarter, then at 448 and 3/4. So it acts like we've got some support behind us. It feels good. We've got some good exports. It looks like we're going to tighten up some stocks going into WASDE report. However, I say all that, but we got to be careful that we don't get too optimistic here. I think we're coming into some areas here soon where we're going to need to be making some sales.
Well, and speaking of sales, Sue, you and I had talked earlier on Friday, and the fact that China was in making some purchases for February and March. Is it one of those goodwill type of purchases, or do you think there's more, kind of solid need for what they're doing?
I think that China has need. Now, granted, they had a better crop, both in beans and corn this year themselves, and their farmers have been sellers here of late, which is interesting because the Brazilian farmer also has been making sales since they started to receive rain. But I think that when we look at China, you got to keep in mind they have these new facilities they have produced or built, and they still have the old. And so they have a larger need at this time. And so we're going to see China in our market. Mexico, very important buyer. And again, I think they've become our number one buyer for corn. And so maybe our shipments is a little bit behind on beans even, but still the bottom line is demand is much better than what we were being targeted for at first.
How bad, Jeff, is the wheat in Russia at this point? What are you hearing?
Well, that's always interesting. One, we always know as we look at Russian information, just like we look at Chinese information, we always have to, question a little bit the source. But, what we're being told, or what, for instance, what Reuters has reported is that you've got, 37% of that wheat crop that's in poor or didn't sprout. And just to give you a reference point, that compares to about 4% last year. But also in some of those same articles that came out, they've also stated, but yet, the crop is not in the critical state. Well, it sounds pretty critical. But the only thing about it, we have to remember this is wheat. And if we were sitting here talking maybe 30 years ago, some type of scare like this would get some action in the market. Wheat is such a world crop that's, grown and used in so many different areas. It is concerning. We do need to watch. We know that based off of what we've seen for rainfall data in eastern Ukraine and also in Russia, that it has been extremely dry. But what's really hard about this is the fact that just because we're dry now doesn't necessarily mean that the rains won't come at some point. And when we come back around the next spring, it doesn't mean that all this can be corrected or corrected in some degree. So it gives us a little bit of headline support, but in the long run, I wouldn't want to basically put my whole marketing plan together just based off of it.
Look at livestock here for a quick moment with you, Sue. How tight are our supplies? I mean, we saw 2 weeks of amazing cash numbers. 2 to 5 higher last week, $2 plus this week. I know many cattlemen are hoping that momentum will continue into next week. But then there's also the rumbling that things are just getting tighter and tighter in the country.
Well, they are. We're already starting to see a holdback of heifers, especially in Oklahoma and Kansas. And so that's a start. And of course, that'll be more increased as we get in towards spring, towards March, maybe February, March, April. But I think that the packer has been very creative trying to keep his kill in check, because he's trying to prop up the cutout. The cutout a lot of times this time of the year does soften. But I look at the cattle market. There's an old saying, as goes the stock market, so goes cattle. We had the jobs report come out much better than what was expected. It came out at 227,000 new jobs versus the expectation of 214,000 new jobs. Mm-hmm. And then on top of it, car sales in November were up nicely. That's usually signs of a good economy, not to mention, though, there's an abundance of cars out there on those lots and they're getting some incentives to buy. So, but that's usually a sign of a good economy. So if you have a good economy, they'll pay for what they want at the grocery store. And I will admit, I was at a Hy-Vee store at Ames, Iowa, which is where Iowa State University is. And it was interesting because there wasn't a lot of pork in the counter. I was really surprised at that. I even asked the guy at the meat counter, I said, do you have any more ground pork? And he said, well, we're out here, but in the coolers, there might be some. And there was, but yet not very much. I was real surprised to see that. So it just shows demand is good.
Which is great to see, because some feel like the pork industry has been on the sleepy side in the market. So hopefully we see some positivity happening for them as well. As we get ready to wrap up, we know we have a WASDE report coming out on Tuesday. Wanted both of your takeaways on it. So Jeff, I'll start with you. What are some of your early thoughts on what those numbers might say?
Well, in the December report, we know that the production is going to be set. We'll see no adjustments on the corn and soybean production numbers. So it's already going to be over on the demand side. Overall, what we're looking for is we are looking for an increase on corn exports. That could go up probably. The numbers of the weekly export sales and inspections would suggest we could go up as much as 100. I don't think we'll see that. Maybe we could go up another 50. So overall, I think we tighten up our ending stocks on the corn side, maybe 50 million bushels, which won't be enough to really move the market. Then the market will continue to have to look at what's going on down in South America on weather. Over on the soybean side, the trade is really looking for probably not much of a change on the soybean ending stock carryout numbers. I think there's room there to increase crush. They had decreased crush in previous reports. I think there's room to increase crush, even though we may even suggest that on the export sales side, there could be some room to increase it there. I don't think we'll see any change on the export side. So I'm looking for maybe a 5 to 10 million bushel decrease on the ending stock numbers on the bean, Susan.
All right. And Sue, for you, what do you see in this report come Tuesday?
Well, in corn, I think that the yield will inch lower, although the major part of that, I think, will be in the month of January. And then I think exports inch higher. I think that corn exports have been underestimated for some time. And so I think the USDA WASDE will adjust that to some degree in this. So I would have to agree with Jeff. I think that we could see a 30 to maybe 50 million bushel increase in the exports there. And that all goes down to tightening the carryout. In soybeans, I think that the exports, we have to keep in mind, USDA is expecting an 8% increase in exports this year. And so I think for 24-25. And so I don't know if we'll see a whole lot of change in that. The crush, maybe a little bit of a increase. I'm not sure about that. I guess, and the yield, I think, took its big reduction here in November. If they lower it, it'll be by just a pittance in beans. So the carryout maybe remains about the same to just a little lower.
Well, thank you so much for both of you joining us. Quick reminder to everybody, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And information on this show is provided for educational purposes and not intended for influencing of legislation, government policy, or action. And that's been another edition of the Nebraska Soybean Board Weekly Market Roundup.